Hello, everybody. Welcome to the WoW market update. What do we look at here? So, let's get straight into it. I want to see how Bitcoin is doing and how it's faring since we last looked at it. This is the daily chart. So, again, each candle here is represents one day, and you can see in the overall context. And again, just I covered this in the last day, but just very briefly. Normally, in a channel, if you look at the two blue lines here, when you enter into a channel like that, whatever way you enter into it, more often than not, you go out of it. So if you come upwards into the and then form a channel, more often than not you will go outwards when it does break out of that channel. So the chance of it breaking down are relatively low, but of course nothing is impossible. That's just in general. But you can see, there's been a general overall weakness in Bitcoin over the last 6, 7 months. It's been sideways, but it's sideways with a slightly downward turn. You can see here, from its all-time high, it's made numerous attempts to get up to that all-time high again. Each time it's failed, and it's failed at a lower number, pretty much. On the other side, you can see each time it goes down, it's gradually been going down further and further. So there's a downward general direction in this sideways action. It shows weakness in Bitcoin. With all the very, very positive fundamental news about cryptocurrency in general, about Bitcoin, Ethereum, ETFs, institutional investment, governments, wealthy people all over the world talking so positively about Bitcoin. Now there's people talking about not just a two or 300,000 Bitcoin, but a million. And then there's people talking about 5 million and 10 million and, all sorts of numbers for Bitcoin in the future. With all this amazingly positive fundamental news around Bitcoin and crypto in general, why is it going sideways and in general terms, slightly downwards? Well, I personally believe an awful lot is that has to do with the overall macro environment. The macro environment isn't overly friendly to risk on assets at the moment, though of course you could very much argue that when you look at the S&P and the Nasdaq going on, a really positive run for the last 18, 8, 10 months of this year. So where we now? So if we look at that, like I said, it's a sideways action for on the daily, right? I'm going to click on 4 hour this now, so it'll zoom in, and you can see this yellow bar. So I'll just zoom out quickly. You can see the yellow bars over here on the right hand side, and so when I click on the blue, or sorry, the 4 hour, it zooms us in on that. So on this one, you can see it was a generally upward trajectory between these two yellow bars, and again, you can see we came in a downward into this channel, and the idea would be that you would expect it to potentially go when it comes out of that channel to go in a downward motion. I actually had these lines drawn here on this day when I showed you this last week, and so I'd drawn this at the same time using these numbers. You can see here, it made an attempt to get back up to there. It failed, and then it made all its way down to this other what was a support line. It pierced through it on a couple of occasions, but in general held. It tried to make its way up. It hit off it again a number of times. And actually, we did the video here last week, and I actually suggested at that stage that it was my expectation that it would break below the yellow line, make an attempt to get back up, more than likely would fail and continue downwards. And as you can see, it's exactly what has happened. I'm not saying get it right all the time, but we certainly got it right on that. So now you can see this has come downwards into the channel, and now it's after breaking downwards out of the channel. And now if we go in even closer, I'm going to go to the 1 hour, we can see these green bars. And again, we've come into these green bars in a downward motion. We're going into a channel now. And again, you can see it's after hitting off, again, these yellow, these lines, I actually drew those earlier today off this particular red one. And you can see now, right now as we speak, it's actually just after touching off it again. So again, it's very much showing a lot of weakness at this stage in the Bitcoin charts. So if we go back out to the daily, you can see sideways action overall, was on an upward curve here, channel, with the belief that it was going to break down. It appears to me again, as we've come in a downward motion into this channel, there's every chance this breaks again. And there's every likelihood, I believe, for it to get back down to these levels. And those levels there, around here is 45. If it extends out further, it could go down to the 43 mark that I've been talking about for quite some time. Will all this definitely happen? Of course, we have no idea. But what's happening in general terms? Well, I suppose historically, the weakest average month of the year for Bitcoin is this month, September. And bearing in mind we're just in the 6th of September right now, there's plenty more potential downside in the month if we continue as we are. Of course, that there's no guarantees of that. I suppose on the positive, you might say, well, look, October, November are some of the most positive months of the year for Bitcoin. So maybe we just need to go through this difficult phase, and I suppose maybe boring phase within the crypto space right now. All the sideways action, real weakness in Bitcoin. I guess for me, there's again a lot of people talk about all-time highs. My question is, where is the energy going to come from? What's going to suddenly drive Bitcoin to move forward? It's 6, 7, 8 months going sideways. It's showing weaker and weaker despite all the really big positive stuff happening in crypto. What's driving it down? Personally, I believe it's the overall macro environment. Is this just affecting Bitcoin? Is it just affecting crypto? Is it the stock market? Well, let's have a look. If you look on this chart here, this is Coinbase. And Coinbase, again, this is over many months. You can see that it's been on a general upward trajectory. Every time it touches off this line, it's done well. Bounced here again, bounced here again. Each time it's made its way down, it's bounced strongly. You can see it's right on that resistance line. So again, the expectation for many would be that it'll bounce here and continue upwards. But what if it doesn't? We're at the start of a traditionally bearish month for crypto and risk on assets. If this is to break down below this blue line, in all likelihood, it will retest that line, but then it could really go down a very significant amount. If that were to happen with the likes of Coinbase, could it happen with others? Well, let's see. Is this situation lining up elsewhere? Here we have Ethereum. Ethereum doing very similar. Every time it hits off this line, it does well. Every time it hits off the line, it does well. Here it is. It's already hit off this line and it hasn't the energy to go and take off like it normally does. And it's making its way back down to that line. And again, it's not just Ethereum and it's not just crypto. This is NVIDIA. NVIDIA, same thing. Double tap, off it goes. Double tap, off it goes. It's just double tapped. Is it a case that it'll repeat and off it goes, or will it break this line? And if it breaks the resistant line, which it certainly has a chance of doing during this time of uncertainty, a lot of uncertainty out there in many in macroeconomics. There's what's happening all over the world, but of course, the lead up to the election. So there's a lot of uncertainty now with jobs. Of course, later on today, in fact, very shortly, we'll see the latest job reports in the US, and that will have a very significant bearing on the outcome of the direction in the short term. If it shows weak signs, there's every possibility that it could cause a pullback in all risk on assets, such as NVIDIA, such as cryptocurrency, and such as the NASDAQ itself. Let's look at the NASDAQ. The NASDAQ is also trending upwards, as you can see, for many, many months. And again, it's touched off this blue line, this line of support many times. Will it hold again and continue on as normal? Or will we see a break in play? And if we see that break, if we see the information coming out in the macroeconomics, particularly in the US, if the job market is particularly weak, this could be the straw that breaks the camel's back and causes it to come under this resistant or support line and could create a new resistant line where it comes below, it tries to get back up, it fails, and it comes back down much lower. If that is to happen, of course, that is going to be detrimental to the stock markets in general, but also to any risk on assets and certainly to crypto as well. And so finally, I'm going to show you Bitcoin. So again, Bitcoin has been following this particular trend line, but you can see Bitcoin has outperformed and has not come back over the last number of months towards this line. So in theory, Bitcoin could actually come back as far as this line, not break it, but at the same time, break the resistance lines for the rest of the altcoins. If you've noticed, and I'm sure if you're watching the market over the last number of months, as Bitcoin goes up through this sideways action, over the last 7 or 8 months. As Bitcoin goes up, altcoins go up a bit. And when Bitcoin comes down, those altcoins lose more than what they gained. And that action has continued all the way through, so that while Bitcoin is more or less holding its general level, though in a slightly downward direction, the altcoins have been getting crushed during this time. And so it is absolutely possible for Bitcoin to hold its trend line while coming back down here very significantly, still hold its trend line, but have all altcoins or the majority of other altcoins get absolutely crushed in the process. Because if this was to come back down to this, in around this blue line or pierce this blue line and hold, it still can make its way down to sort of 45, 43K and still be able to continue on. how could this happen in general? Mostly what happens in the alts, they follow what Bitcoin does. Well, I believe the reason that this has set up as it has is because institutional money has very much come in behind Bitcoin and believe in Bitcoin and back it. Whereas they don't have the same belief in the altcoins. Yes, there's been a certain movement towards the Ethereum ETFs, but it's been nothing remotely close what Bitcoin did. The belief out there in the institutional markets and the institutional investors, governments, etc., it's pretty much all about Bitcoin. And yes, of course, they are looking outside of that, or some of them are looking outside of that, but the majority are in favor of Bitcoin and feel safe there in that crypto versus the others. And so it is very possible for Bitcoin to hit, like I said, that sort of 45, 43K, destroy the altcoins, of course, giving huge opportunity and huge buying in prices, while still maintaining its own levels and its own lines of support. So, what's likely to happen from here? Well, there's huge uncertainty and there's some major dates coming up over September. One of them, like I said, is today with the jobs reports. Then we've got the CPI data, the PCI data, which the government tend to look at very closely. And of course, there's the Fed meeting, which I think is the 18th of this month. And of course, it's been very heavily signaled now that the expectation is that there's going to be a rate cut for the first time in, well, actually, it's been held since I think July of last year. Higher for longer, as they were saying. But now it looks like the rate cuts are going to start because I suppose there's weakness being shown in the economy now. The jobs are much weaker than they had anticipated. The information that they were looking at has been revised just last week, reducing the number of jobs they say had been created by 818,000, which was nearly a third of the jobs they claimed were created in the first place. So a massive revision downwards. This suggests that the information that they were using to not cut rates all along was false information. And in fact, I did a video a few weeks ago based on LinkedIn, which of course has their finger very much on the pulse, stating that the information was nowhere near as strong as the information that they were using to make these decisions. That has proven to be true. Since then, we see up-to-date information now from LinkedIn stating that it's even worse now, in that job hiring rates are down by 7.9% in the last 12 months. And the increase in job searches has gone up by 9%. So more people looking for jobs and less jobs becoming available. And the only thing that has prevented it from being a total collapse is government jobs and healthcare. There's only so many people the government can actually end up employing. So it looks like, again, the information will come out today, but it's highly likely that we have a weaker and weaker jobs market. And this was the market that they were saying that, it was remaining strong while they were keeping interest rates higher for longer so they could fight inflation. Inflation is down to 2.9%. It's going to be very interesting to see where it goes and the information that comes out on that during this week. And of course, that will have an effect. But ultimately, what does that mean? Based on this information, Jerome Powell and the Fed will decide whether to reduce rates and by how much and how many times. So it's very much expected that there's absolutely going to be a rate cut of 0.25% on the 18th announced, but many believe that they may have to go to 0.5% or more, again, depending on the information that comes out between here and then. But the 0.25% is baked into the price now. So I don't think that's going to make, if that's what's announced, I don't think that's going to move the needle in any major way for Bitcoin or anything else. I think you might see an immediate reaction, but not something that lasts. If they go for 0.5%, again, yes, there's probably going to be a bigger move for a little bit longer, but I don't think it will last either, because ultimately, if they come out with a 0.5% reduction, they are literally telling the world our economy is in trouble and we're going to have to reduce rates at a rapid rate. What they have to say about the rest of the months and the potential reduction in rates between here and the end of the year will have a very big bearing. If they're saying it's 0.25% and we'll have a look and see whether there's any more required for the rest of the year, I think that'll be seen pretty negatively, because people are looking for a lot of rate cuts to come pretty quickly. I think they're damned if they do and they're damned if they don't, because if they signal that, look, there'll be a few but nothing major, the markets will react badly. If they say, oh, we're doing 0.5 in September and we're going to do another zero point 0.5 or another 1 to 1.5% between here and the end of the year, while in general the market will say that's great, that's good for risk on assets, they are literally telling the world that the economy is in significant trouble, and that will have longer term negative effects, I believe. So, do I see the likes of Bitcoin and other cryptocurrencies doing, really well and going into a bull cycle off the back of increasing interest rates? Sorry, reducing interest rates. No, certainly not immediately. Over time, yes, and I'm referring to months. But the other thing that we need to look at is the election. There's of course, the vast majority in the crypto space now believe that, in very basic terms, Trump is going to be good for crypto. Kamala Harris is not. Whether that's true or not, that's the belief that's out there. And so, if it looks like, obviously there's going to be a debate coming up in the next few days. If that goes, for example, particularly well for Trump, then I think that will bode well for crypto again. It'll probably show on the charts in the shorter term. If Camilla looks like she's winning, could have a negative effect. But again, I think these are more short-term movements. And of course, then we have to wait till probably the 5th or 6th of November to see what the actual results are. And then that certainly could have an effect. But what's going to have the biggest effect on all of this, I think, is actually liquidity in the marketplace. So if we just scroll here, you can actually see a chart, and this is based on interest rate reduction. So if you look at, go back here to sort of 2019, or it just coming into 2020, you can see they started reducing interest rates. Bitcoin didn't start climbing immediately following that. It actually was a number of months and a lot of rate reductions. And in fact, a couple of months after even all of that, before Bitcoin started to move. So it took quite a while for the interest rate reductions to take effect into a risk on asset like Bitcoin to really start moving. Likewise, you can see when they started increasing interest rates, it took them, while Bitcoin was moving up and down in a general area, when they started really increasing the interest rates, you can see Bitcoin really started to plummet. And likewise, now we can see that it plateauing at the top. If they start reducing interest rates, I'd expect to see something like we've seen back here in late 2019, where it takes quite a number of months for that to come through into the space. However, if you look at global liquidity, you can see global liquidity and the Bitcoin price tends to move really. There's a very slight delay, but it's weeks or months rather than many months. And so I think it's global liquidity is the one that has the potential to really move this market. So what does that mean? So traditionally, October and November are really good months for Bitcoin and crypto in general. While I believe it could be reasonably good for Bitcoin, and again, we could see plenty more sideways action on the run into the elections. I think it's going to be after the elections now before we see real energy and real go for Bitcoin to go into all-time highs and beyond. And it could take a number of months. It really depends on how aggressively they reduce the interest rates, how the jobs market holds up, which I don't expect to be that good, and then who wins the election and when they start printing. And so, if for argument's sake, we saw interest rates reducing rapidly, I think that'll have a negative impact in the shorter term. In daily, positive, weekly, negative, months, over a period of months, it'll be good. For liquidity, I think when the printers start, I think that'll happen pretty quickly. And then if that's held until after the elections, then it could be into next year before we see this thing really rally. So what do we do now? How do we use that information, or what should we be doing? Sorry, just one other point before I get onto that. The other thing is I'm sure you've probably heard about the yield curve inverting and uninverting and so on. So the yield curve is the one they particularly tend to follow is the 10-year and 2-year spread. And usually when this goes into negative, which it has been now for a couple of years, usually that's a prerequisite to a recession. And when it actually uninverts, in other words, gets back up over this black line, that is an indicator that we're either in or just about to hit a recession. Well, it just touched off that. It actually just got up above the black line. It's just retraced very slightly now. But if that were to break through, it's highly likely that we are either in or in the process or on the way to a recession. I think that's highly likely based on all the macroeconomics that are out there. And so, where to from here and how do we use this information? For me personally, the way I view this is this. At the moment, I don't believe is particularly a good time to be jumping into the market. That's not to say that the market can't go up from here. It's not even to say that we can't have a bull run next week. But if I was to go based on risk reward, now wouldn't be a time that I personally would be putting dry powder or investments into various crypto projects at the moment. Because number one, I think there is a significant chance of a significant pullback that would give us an opportunity to buy into many cryptos potentially much, much cheaper. And so, what should we be doing if we're not investing? Sit in our hands and do nothing? No, educate. Educate yourself on what's out there. What are the ones that you would like to get into if they got much cheaper? It would be great to get into really well established projects in the right areas of cryptos that you've researched well and be ready to get into when the time is right, if you have dry powder to do that. And so, what should you be looking at? Well, do you think you should be investing in layer ones? Do you believe you should be investing in AI or gaming or metaverses or decentralized physical infrastructure or what or what? And so, if for example, I mean, most people are talking very strongly about AI, but if Nvidia breaks its current point, and bear in mind Nvidia is now back 17% from its all-time high, which is a significant pullback. If it was to break its line of support, then it could potentially come down significantly. It's highly likely that would have a very direct effect on AI tokens, as they tend to follow. So there is the potential for buying into these projects at a much, much, much lower value. Again, that's not me telling you, oh, you shouldn't buy into anything right now, because again, maybe it all takes off tomorrow, and I've read this wrong. That's absolutely possible, and I'm certainly not giving financial advice. I'm just giving my opinion on what I'm doing, and how I will go about doing it. And what I'm certainly spending time doing, and have been, of course, for years, but continue to do so, is, let's say, for argument's sake, I'm looking at layer ones and I'm going, okay, which ones should I get into? Should it be Ethereum? Should it be Ton? Should it be Solana, XRP, or whatever? My way of looking at that is, let's say we believe Solana is the one. That's the one because, it's fast, it's cheap. There's a lot being built on it. There's loads of really good reasons why you might think Solana is the place to go. So do you just go and buy Solana? Maybe. Or do you buy into Solana's ecosystem, and within that ecosystem, buy into the areas you think there'll be the best growth? So maybe, for example, you think, and I do think, DeFi is going to be really strong in this bull run, because DeFi actually creates real value. It actually makes money. So it's not just a theory. Many of these projects have been making very good money for years. Maker has been doing very well. Aave, Uniswap, various DeFi projects that have done exceptionally well and are making money on a monthly basis. So if you think DeFi is going to be good and you think Solana is going to be good, well, why not pick a good DeFi project on Solana? Because if Solana is going to do well, it's highly likely, if you've done your research and you've picked a good DeFi project, then that's highly likely to do well by a multiple of what Solana would do. Likewise, you might like DeFi, decentralized physical infrastructure, DePIN, and I do. Again, because I think it's going to have real world use case and make real world money. And therefore, I think institutional money will look towards that. So if institutions like Solana, which I think they do, and they like decentralized physical infrastructure, well, then why not look for a number of really good decentralized DePIN projects on Solana and really multiply the upside if you believe in those. So you're buying into more than one area by buying into one particular project or a number of them. And then you can do that in each particular space. This is something I'm thinking about talking about more, not on the weekly updates, but separate videos for our private group, looking at projects that I think are strong, not necessarily recommending to buy them right now, but ones that would be worth looking at or possibly having in your view as something to look at the right time. Of course, if I or WoW or whatever buy into any of those projects at any point in the future, we will, of course, let you know. But you should do your research onto what you think would be good areas for you to put your funds into if that's what you want to do. So with that, if that's something you'd like to see, please, comment in our group and let us know what is it you'd like me to cover in those areas, or if you'd like me to cover those areas. And any feedback you have on this is much appreciated. So, yep, have a look. Let me know what you think of what we've covered, what you think of the market yourself, what you'd like me to cover in future videos outside of the market update, and we'll take it from there. Have a good weekend.